Hi, and welcome to this week's Market Insights. We've got many economic events ahead of us this week with key interest rate decisions, crucial inflation data and major corporate earnings all on the radar. From Australia to Canada and the UK, central banks are at a crossroads and the markets are watching every single move. Now, this week's events could bring heightened volatility, as we said, over the past few weeks, and potential opportunities as well. So let's break down what you need to know to try and stay ahead of these markets. First up, it's the Reserve Bank of Australia, and they are set to announce their interest rate decision on the 20th of May at 7:30 a.m. GMT plus 3. Now, markets are fully pricing in a rate cut thanks to positive economic data. The RBA's preferred measure, the trimmed mean inflation, dropped to 2.9% in the first quarter of 2025, down from 3.3% in Q4 2024. Now, this is the first time since 2021 that inflation is back within the RBA's 2 to 3% target band. But the big question is, how much will the RBA cut the rate? Now, most expect a 25 basis point cut, but the ASX's RBA rate tracker shows a 51% chance of a 50 basis point move, which would bring the interest rate down to 3.6% and would be quite a strong move. Now, however, market participants will also be closely watching the statements on monetary policy, where the bank will outline its assessment of current economic and financial conditions, along with the outlook guiding its interest rate decisions. So that could be absolutely key. In addition, we've got the press conference at 8:30 a.m. GMT plus 3, which could further influence Australian markets. Now, if the RBA's decisions or comments catch the markets off guard, we could see some significant price volatility. Okay, up next, it's Canada's turn, and Canada's inflation numbers that will be out on the 20th of May at 3:30 p.m. GMT plus 3. Now, this is the last inflation report before the Bank of Canada's rate decision meeting on the 4th of June. So it's a pretty big one. Now, the Bank of Canada expects inflation to drop to 1.5% in April, helped by lower oil prices and the end of Canada's carbon tax. But there is, of course, a twist. US tariffs could temporarily push prices higher. Now, whilst tariffs seem to be changing on a regular basis, there is no doubt at some point there will be a slight market reaction to them. Now, in March, annual inflation cooled to 2.3%, down from 2.6%, lower than both the market expectations and the Bank of Canada's own forecast of 2.5%. Now, that decline gave the Canadian dollar a short-term hit. The big question now is, will inflation continue to drop, or is this just the calm before the next spike potentially caused by tariffs? Either way, expect some high volatility in Canadian pairs once the information comes out. Now let's move to the UK, and the release of inflation data on the 21st of May at 9 a.m. GMT plus 3 could heavily influence the Bank of England's next move. At its last meeting, the Bank of England cut rates from 4.5 to 4.25%, its fourth cut since August, and markets are pricing in 2 more by the year end, possibly bringing rates down to 3.75%. Now, the timing of those is being adjusted slightly, or expectations of the timing, due to some fairly positive growth figures that came out last week. Now, although inflation has eased and unemployment is rising, Bank of England chief economist Hugh Pill says it's still too early for more rate cuts, which is a bit of a setback for households and businesses hoping for relief from high borrowing costs. But say, information that's coming out almost on a daily basis seems to be changing expectations of time frame. It's also worth noting at the last meeting there were a couple of votes for a 0.5% cut rather than just a 0.25% cut. Now, March annual inflation dropped to 2.6%, below both market and Bank of England forecasts. Core inflation also eased slightly. This initially pressured the British pound, but the currency quickly bounced back. And will that trend continue to push the central bank towards more rate cuts? Well, this release could well be crucial for pound traders. Keep your ears and your eyes open, and don't forget your risk management techniques. Okay, and finally, a little reminder to not forget about the corporate earnings season, which is still going strong in the US. Results from major companies can shake the markets, of course. Strong reports may lift stocks, while weak earnings could trigger sell-offs, especially with global uncertainty still high. And we're starting to see creeping in some information on how tariffs have been affecting US businesses. Well, that wraps up this week's Market Insights. Between the RBA rate cut, key inflation data from Canada and the UK, and major earnings report, this week could bring us some serious market moves. So don't forget those risk management techniques, and remember, taking as much information as you possibly can. Stay tuned to our news and analysis section for real-time updates, and as always, we wish you luck with your trading in the week ahead. Bye for now.